So this is chapter 1, problems, and I added a new problem. This is problem 4. This is a partial income statement, and in this problem we'll learn to calculate implicit cost, explicit cost, and also economic accounting profit. Okay? So let's read it. At the beginning of the year, a high school football coach decided to leave his job and give up his annual coaching salary of $55,000. Okay, so this is the foregone salary that he could be making. This is an example of an implicit cost. Any cost associated with not spending money, however, any cost of the resources that you own and use in business. Okay, well, this is his opportunity cost of his time. So I'm going to mark it with a green. This is an implicit cost. Okay, let's keep going. Revenues $210,000. So I'm going to, this is his revenue. This is going to be marked, highlighted yellow. This is revenue. Okay. Okay, next item in his statement, operating costs and expenses, and it adds them up, right? Total operating costs and expenses, bunch of items, products sold, goods, selling expenses, administrative expenses, everything adds up here. I'm going to mark this with a pink. Okay, let's mark it pink. This is going to be your explicit part of your explicit cost. Let's keep reading. So income from operations is simply revenue minus explicit cost, 110. So ignore that, okay? Interest expense, interesting. So this needs to be marked pink because this is also your explicit cost. Non-recurring expenses to start a business. He started a business. That's again explicit cost that involves spending money, okay? So his explicit costs so far are 100,000, 14, 24, revenue 210, and then implicit cost, one item is 55. Let's keep reading. To get the sporting goods store opened, former coach used $60,000 of his personal savings. Okay, the coach opened a store in the building he owns. Prior to opening the store, building was rented for $36,000. You can be like, well, Dr. G, it's his building, he's putting in business. That's gonna be a green too. That's an implicit cost. Okay, so this $36,000 part of implicit. Why? Because he could be making this money from his building. Okay, how do we treat his personal savings? So the $60,000 could have brought him 5% return by investing in stocks or new businesses with risk levels similar to whatever. So 5% of the $60,000, this $3,000 will also be green, which is going to be implicit cost. Okay, let's get started. Former high school coach incurs blah blah total explicit cost for using market supplied resources. Explicit cost, total operating expenses 114, interest and non-recurring one-time payment 24. So this is going to be $138,000. And the answers are here too. Boom. The opportunity cost of owner's equity capital. We're talking about this $60,000 times 5%, $3,000 annually. Boom. Total implicit cost of owner supplied resources. What do we have? We have owner's equity capital. Okay. We have rent that he could have earned if he actually rented out his space plus 50. So this is foregone rent. Foregone salary, $55,000. Add these all up. What do we get? 11, 14, 1. I'm doing math real quick. This looks like it's $94,000. So this is his total implicit cost. Total economic cost. Okay, that's easy. We marked everything. 100,000 here. 14 and 24. 100, 14, 24. 138K will be his explicit cost plus what was his implicit cost. Okay, so sorry, it's asking for implicit cost, and we actually calculated that. My brain is going back and forth. I apologize. I forgot to write this down. Total economic cost. Total economic cost is the sum of implicit cost plus explicit costs. Okay, implicit cost is 94K. Explicit cost is 138K. Okay, 138. You add them up, $138,000. This is explicit, and 94 implicit cost 0002 $232,000. Okay, this is economic cost. Cool. What's the next question? 232K. Accounting profit. Okay, accounting profit is revenue minus explicit cost. Okay, what was my revenue? Go up. Your revenue was $210,000. We're gonna write it down. 210 minus what was my explicit cost? $138,000, which is going to give us 72. It should be $72,000. This is accounting profit. Last one is the okay, so all right, so this question is wrong. Okay, there's no F. Part E is, what is the economic profit? So it's also, it's not F, it's E. By how much the coach's wealth change opening sporting goods store, that is his economic profit, your real wealth. So economic profit is going to be revenue 110 minus total economic cost, which we found here 232,000. So if you look at the answer, you're going to see 210 minus 232, negative $22,000. He actually ended up losing money. So his wealth, okay, so this is not part F, this is E. How much his wealth changed, so what is his economic profit, is negative 22,000. It looks like he is making $72,000, but you're not counting the salary he had to give up, $55,000. You are not counting all those factors. Don't forget that, okay? Also, you're not counting the rent he could be getting, and you're not counting $3,000 he could be getting. All right? So that's it, folks. This is the end of question.